Today is Wednesday, 11th of June, 2025, 6 a.m. Eastern Time. This news is brought to you by Preeti Capital, your trusted source for financial insights.
Welcome to the deep dive. We've got a stack of sources here today, market insights, corporate performance stuff you've shared, and we're going to dive right in.
That's the plan.
The mission, really, is to cut through all the noise, pull out the key movements, the trends, those company stories that matter, and give you a clear picture of what's actually going on.
Exactly. And this material, it gives us a lot to work with. Specific data points, broad index moves, sectors, commodities, individual stocks.
And even what's coming up next.
Right. So the job is connecting those dots. Is this current market strength real? Is it sustainable? Or are there signs pointing to maybe longer term caution? Let's use these sources. Let's explore that tension.
Okay, let's unpack it. Starting broad, the data gives us a kind of health check on the S&P 500. It mentions a pretty solid 78.2% of stocks are trading above their 50-day moving average.
Yeah, that's 78.2%. That definitely points to significant short-term momentum. But what's interesting, if you dig just a bit deeper in the report, is that only 51% of those same stocks are above their 200-day moving average.
Ah, right. So that 51% number, and this is based on what, 473 stocks?
A broad sample.
It suggests that while things look strong, now the confidence is a bit more tempered when you look at that longer trend.
Precisely. The overall market sentiment described, it feels, well, cautiously optimistic. There's a real balancing act happening, weighing that growth potential against those economic uncertainties that just, never seem to go away.
And you can kind of see this cautious optimism in the indices. They've been up for 3 sessions straight, according to these numbers. S&P 500 climbed 0.55%.
Yeah.
NASDAQ did even better, 0.63% gain, which the material actually links to optimism around U.S.-China trade talks.
Interesting connection there.
Yeah, and the Dow, a more modest 0.25% increase, maybe suggesting that caution is still, weighing a bit more heavily there.
Could be. And that S&P 500, it's also sitting just under 2% from its all-time highs. So close. The report also mentioned the RSP to STY ratio slightly decreased, 0.37%.
Okay, RSP to SPY. That's the equal-weighted S&P versus the market cap-weighted one. So what's that subtle shift telling us? Just a minor dip?
Well, a minor decrease like that suggests investors might be leaning slightly more towards the bigger large cap stocks right now.
Oh?
It's sort of a classic move when things feel uncertain. People often gravitate towards that perceived stability in the big names. It fits that consciously optimistic theme we were just talking about.
Right, that makes sense. Okay, so where's the money actually moving within the market? Because the sector data here looks pretty revealing about this whole dynamic.
Absolutely. If you look at the sector performance highlights from the material, technology is clearly leading, up a notable 2.32%.
Wow, yeah. That really screams confidence in tech's growth story, doesn't it?
It does. And communication services also saw a strong gain, up 1.78%. Industrials, too, up 1.61%.
Yeah.
So it's not purely tech-driving things. There's some diversified interest in other areas linked to growth. But what's really telling, I think, when you look at the market's mood, is where money isn't going right now. Consumer staples, down 1.44%. Utilities declined 1.2%.
Huh. Those are typically seen as the defensive place, right?
Yeah.
Where investors hide out when they're worried. So seeing them decline, what's that signaling in this cautiously optimistic market?
It strongly suggests a pivot. Investors seem to be rotating out of those traditional safe havens and moving more into growth-oriented sectors. It's almost like the market's saying, okay, maybe the immediate risk isn't quite as high as we thought.
Let's dip our toes back into growth.
Exactly.
Yeah.
But doing it selectively, that's the cautious part still lingering.
Right, making the move, but maybe keeping one eye on the exit. Okay, let's look at commodities and fixed income then, because the sources cover those too, and they add more pieces to this puzzle.
Definitely. The picture in commodities is, well, it's mixed. WTI crude oil slipped 0.9%, Brent crude down 0.72%.
And the reports link those to supply dynamics, geopolitical tensions, the usual suspects for oil.
Pretty much, yeah. Always a factor there. But then you look at gold, the classic safe haven.
Went the other way.
Yeah, rose 0.41%, got over $3,345 an ounce. So when you see gold rising while oil's dipping, it feels like conflicting signals, doesn't it, about global stability, risk appetite.
It really highlights that tension you mentioned earlier. Gold says uncertainty, but the equity rally and oil dip might be pointing somewhere else. What about silver?
Silver was pretty stable, up just 0.02%. And natural gas had a significant drop, actually, down 3.25%. The report chalks that up to shifts in energy demand and supply expectations.
Okay. And on the fixed income side, the 10-year Treasury yield saw a minor decline, 0.18%.
A small drop in yields like that often suggests a cautious bond market, maybe anticipating those global trade developments that were mentioned. It's another piece of that caution puzzle.
And the VIX, the CBOE Volatility Index, the so-called fear gauge,
Yep.
decreased 1.22%.
Right, a lower VIX usually signals less market anxiety, which kind of fits with the recent rally in stocks.
Makes sense.
The U.S. dollar index also saw a modest uptick, 0.11%, showing a bit of resilience there. So you put all these indicators together, bonds, volatility, currency, it shows a market really grappling with different forces, reacting to data, reacting to sentiment, all at once.
So if that's the broad landscape in the sector rotation, how does this play out at the company level? The sources really got into some specific names, and that's where, the rubber meets the road.
Yeah, this is where we see these bigger themes manifest in very real terms. The report gives us these snapshots of companies reacting pretty strongly to their own specific circumstances, even within these broader trends.
Okay, let's start with tech and EVs. Tech's leading the sector, so.
Intel, clearly navigating some challenges.
Yeah.
The material mentions headcount reductions, focus on core engineering under Lip-Bu Tan.
Yeah. But despite those efforts, Intel stock has really struggled, plummeted 35.1% over the past year. The report links this partly to losing market share in that add-in-board GPU market, graphics card.
Right, for gaming PCs and such. Exactly. And NVIDIA just dominates that space, like 92% market share, according to this.
Wow, 92% for NVIDIA. Okay, speaking of them, while Intel struggles, NVIDIA's had this, remarkable recovery, rallied almost 50% since a dip in the spring.
Yeah, the report highlights their record Q1 fiscal 2026 revenue, driven by advances in supercomputing, quantum computing.
They seem positioned right in the heart of that whole AI boom.
Absolutely. And the report makes it pretty clear investor confidence there is just incredibly high, even with, broader geopolitical stuff going on.
Then you've got Tesla, always volatile, down 30% year to date, but saw a recent uptick, gained 5.7% in the session covered here, amidst news about its robo-taxi plans.
Just shows how quickly sentiment can shift on specific company news.
Totally. Other EV players facing headwinds, though, Lucid Group, down 24% over the past year. Their focus, according to this, is on boosting U.S. production, securing supply deals, like one for American Graphite for batteries.
It really points to the intense competition, the operational hurdles in that whole EV space. It's tough.
Ford actually saw a nice bump recently, up 2.51%. The report notes their focus on the EV segment, which is interesting because apparently they're widening losses in that specific business.
So investors might be looking past the immediate bottom line there, focusing on the transition itself.
Seems like it. Okay, shifting gears. Biotech and pharma. Always prone to massive swings based on news. The report highlights Insmed. Stocks surged into breakout territory.
Yeah, and that jump was directly tied to positive phase 2 trial results for pulmonary arterial hypertension therapy.
A serious lung condition. That's a perfect example, isn't it? Clinical data just driving everything in that sector.
Exactly. And similarly, you see New Amsterdam Pharma shares rose, buoyed by promising trial results, upcoming conference presentations, cardiovascular stuff. Anticipation is key there.
Legend Biotech also saw a big jump in sales for their CAR-VYKPI product. That's a CAR T-cell cancer therapy.
One of the leading ones, yeah.
Oh.
Shows how strong performance in a specific high-value market can really lift a company.
But on the flip side, you've got companies like Lyell Immunopharma facing challenges. Stocks underperforming, ongoing clinical developments, some insider activity noted.
Right. And the material also pointed to Homogenex Pharmaceuticals hitting a 52-week low. Just a reminder of the inherent volatility and risk in small-cap biotech. Setbacks can hit really hard.
But the sector also gives you stories like Regencell Bioscience Holdings, a significant surge there driven by insider buying, market optimism.
Shows how quickly fortunes can change, especially in those smaller, very news-sensitive companies.
Looking at a few others highlighted, Casey's General Stores, convenience store chain, reported strong results, beat earnings, share price up, shows resilience in some retail areas.
Then there's Aeon in HVAC, saw a decline. The report puts that down to high valuation, a recent pullback, even though they actually had strong revenue growth.
So sometimes strong performance isn't enough if the stock's already run up too far.
Exactly. Valuation matters. J.M. Smucker's shares fell quite a bit. Underwhelming quarterly results, declining sales in key segments. Pretty direct cause and effect there.
Korea Electric Power. Strong results, but no dividend declared.
Yeah, a strategic decision, it seems,
Yeah.
amidst global energy dynamics, choosing to reinvest rather than pay out.
And finally, D-Wave Quantum, reaching new stock highs, pushing quantum computing tech, and Rocket Lab USA still capturing interest with successful satellite missions, stock hitting new highs too.
Yeah, those are great examples where the anticipation of future tech, future capability is just a huge driver for the stock.
These company stories really bring the data to life, don't they? You see the broad trends, but then you see how individual execution, trial results, specific product performance, even just investor hope can cause these massive divergences.
Totally agree.
Okay, so we looked at the broad market pulse, the rotation, the individual stories. The sources also look ahead, specifically highlighting key events coming up on June 11th.
Right, June 11th.
Hmm.
A few key earnings reports lined up that the material flags as having notable implied volatility, meaning the market expects a pretty significant price move based on whatever results come out.
First up is Oracle, reporting after the close. The report anticipates a 7.75% implied move for the stock. That's, a decent expectation of a swing.
Then Haleon Planck, the health-focused consumer goods company, also reports anticipated volatility there is 9.27%. Results from a big consumer name like that can sometimes give you broader economic clues.
Chewy, Inc., the online pet retailer, reports before the open 9.59% anticipated movement. Their numbers could give us some insight into consumer spending in the pet industry, which has held up pretty well.
But the highest implied move on the list is SailPoint, Inc., also pre-market, 13.89%.
Whoa. Yeah, 13.89%. That level of expected volatility suggests investors are bracing for, I don't know, substantial news, maybe linked to cybersecurity demand, corporate tech spending
There
trends.
got to be something like that. Big expectations there. And rounding out June 11th, Renew Energy Global Planck reports 8.29% implied movement. As a renewable energy player, their results could be a bit of a barometer for that sector's health right now.
Good point. The report also touched briefly on dividend news, another lens on how companies are using their capital.
Right. NVIDIA, for instance. Despite its massive growth in cash flow, it's distributing a relatively modest dividend. As the report notes, that reflects their strategy. Reinvest heavily into R&D, expansion, focus on future growth.
And you compare that to, say, Regency Centers Corporation, a real estate investment trust, REIT, offers a much more substantial dividend.
Completely different model, focused on stability, returning consistent income to shareholders. It just shows the diverse approaches companies take, which you then see reflected in what drives their stock performance.
So let's try and tie this all together. Looking at everything in these sources, the broad stats, the sector moves, commodities, the individual company stories, what's the overall picture they paint for you right now?
I think they paint a picture of a market that's showing, real strength in the short term,
Mm.
especially in those growth sectors like tech,
Hmm.
supported by specific company wins, promising catalysts. But underneath that, there's still this layer of caution. You see it in the bond market. You see it in gold's move. You see it in the fact that those longer-term averages aren't quite as robust as the short-term ones.
Right. You see that clear rotation out of defensives into growth, but it feels like, as we said, investors are doing it with one eye still kind of watching the door.
Exactly.
And those individual company stories, from NVIDIA's AI dominance to Insmed's clinical win or Smucker's miss, they just show how critical specific news is, driving huge moves, sometimes regardless of the broader market mood.
And understanding all these pieces, the big trends, the sector shifts, the company specifics, what's coming up, that's how you move beyond just hearing the headlines, right? It's how you actually navigate this complex landscape more effectively.
Absolutely. It really is about seeing how it all connects. So here's a final thought then for you listening. Given this mix, we've discussed short-term strength, that underlying caution, the sharp sector rotation, these volatile individual stock reactions to news, upcoming catalysts. What signals do you think are most important to focus on right now as the market keeps trying to figure out if this growth surge is really sustainable?